Yo, what's going on everybody? My name is Ryan and today I'm going to be doing another CPA Reacts video. It's where I gather a bunch of nonsense on the internet and kind of either react or explain them to you here, and it'd be a good way for all of us to learn something new and cover a broad range of topics that actual people are asking. Alright, so let's get started. The first one here says, can capital gains tax be avoided if the money from the sale of a house is rolled into the purchase of a business? I get a variation of this question a lot, where people ask me if they sell their house and then they just buy another house with the money, could they avoid capital gains? And I don't know where this came from. I think it was an old law or something, but that's not how any of this works. You know, if you're talking about a 1031 exchange, it's a very formalized process that you have to run through a qualified intermediary to do that. And you can't do a 1031 exchange with your personal residence either. So the only way to like exclude capital gains on your personal residence is to own it for at least 2 years and to live in the house for at least 2 years out of the last 5 years. And then when you sell it, you can exclude up to $250,000 per spouse. If you're married, that's a total of $500,000. So to answer this guy's question, no, you can't avoid capital gains by doing that. You can avoid capital gains, like I said, if it was your primary house, you lived in it for that period of time, or if you formally conducted a 1031 exchange, if it was a business property, if it was a business house, like a rental property or something, you can do a 1031 exchange to another business property. But you can't do a like-kind exchange to a business, to purchase a business. So no to this person. This person says, we are seeing many S-Corps that are treating officer compensation as 1099 income and not issuing W-2 or preparing payroll tax returns. Income is then reported on the sole shareholder Schedule C. Is this a thing to do now? Does it matter? I have talked to other CPAs and they claim this is perfectly acceptable. Dude, this is not perfectly acceptable. This is actually not acceptable at all. Shareholders of an S corporation, there's a reasonable salary requirements, which means that shareholders are required to take a reasonable salary. And the definition of salary in the IRS's eyes is a W-2 wage. There's no getting around that. There's no paying this 1099 bullshit and claiming on the shareholder's Schedule C. That is completely improper. And if there are CPAs telling you this, then they are idiots as well. So thanks to this person for actually asking the question, and make sure that it's okay, especially if you're not sure, especially if you have other CPAs, other licensed professionals telling you that it's okay. You definitely want to check with more people. And it's gotten ridiculous. Like, you should be able to trust a licensed professional in the field, but apparently you can't. I wouldn't even trust me. I'm just some dude on YouTube. So just dude, this is scary shit right here. This is why you can't always trust professionals. And in the tax world, it's like everybody has their own little mindsets on how to do things, and sometimes it's very incorrect. Is it true that you can wait 3 years before filing taxes without getting in trouble with the IRS? I have a business and personal to file for this year and last year, and they said it's going to cost me $1,150 to do both, and I can't afford it, so I was thinking I was going to wait until next year and then do all 3 years together. No, that's not really true. I would just file the taxes as soon as possible. There are statutes of limitations on when the IRS can collect money from your account. It's like 7 years. Technically it's unlimited, but it's they say it's 7 years where they can collect, or I'm sorry, 6 years where they can collect on your accounts. But that starts at the time your taxes are filed. So as long as you don't file your taxes, the IRS has an unlimited statute of limitations. So filing sooner, taking care of any tax liability sooner, getting on a payment plan sooner, all that is going to help you in the long run than just waiting because you're scared or waiting because you think you're not going to get in trouble. Because honestly, the longer you wait, the worse shape you're going to be in. The more penalties, more interest, a greater chance of being levied, of having liens put against you. Just don't wait, because when you wait, the IRS runs through a collections process, and the longer you wait, the further down the collection process you could already be at if you don't know, and you might not even know it. You know, like if for some reason you're not receiving the notices, then you could be further along in the collections process than you know. And you know, as you get closer to the ends, they can levy your bank accounts and they can put liens on your properties. So get this shit taken care of as soon as possible. $1,000 to file 4 tax returns, that's nothing. Just do it. All right, and then before I get to the last one, I just want to remind you, if you're new here, please consider subscribing to my channel and smash the like button on this video if you're finding it helpful or enjoyable so far. Okay, so this last one, this has got to be like the dumbest question I've seen on the internet from a tax preparer, from a tax professional. And I'll, you know, after I read you the question, I'll provide some context on how stupid it is and how much this person should not be preparing taxes. But yeah, I'm just gonna, here we go. My client received a 1099 NEC for his corporation. Where do I report this on his corporate tax return? So there's, if you're not a tax preparer, there's some reasons here why this is such a stupid question. So if you're not a tax preparer, it's like asking, hey, I just received this Social Security card from one of my clients. Where do I put his Social Security number on the tax return? It's literally that stupid. Like, it's that level of incompetency. Except this person files taxes professionally. Like, people are paying her money to file a corporate return for her. And you know, if you dig through these comments, it's like everyone's like, are you filing returns for money? Like, are people paying you to file tax returns? It's like, yeah, those are legitimate questions, because how are you asking this kind of question if you're a tax professional? So, you know, the 1099 NEC reports income made if you're like an independent contractor, right? Like that's you're familiar with that. They're not required to be issued to corporations, but if they are, then you just report it as revenue. Literally line 1 of the damn tax return, line 1 of the tax return, you report it to revenue. And with the lack of knowledge, you know, like, you don't have to know very much to know that. And it's just common sense if you're a tax preparer. And you know, this kind of shit, it pisses me off so much that people like this are preparing taxes. And I'm not gonna go there and start trashing her business or whatever, but Jesus, like, just stop preparing taxes. Find something else to do, or learn more before you resume filing taxes. Because if you have to ask questions like this, you should not be filing taxes, and you should not continue on the corporate tax return, because corporate returns are much more complicated than individual returns. So please stop what you're doing right now, take some classes, do some continuing education, learn some basics, buy a freaking tax textbook, something. Learn some basics before you move forward, because this is some scary shit. All right, so my name is Ryan. I am a CPA. Thanks for watching. Again, if you're new here, please consider subscribing to my channel, and smash the like button if you found this video helpful, and share it with your friends and family or whoever you might think may find it helpful. All right, I'll see you next time. Stay safe and take care.
I'm in the mood for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a sticker. She picture perfect, so I told him I'm a flicker.